Hello and welcome to FinextraTV. I'm Liam Zevier and you join us in our virtual studio with Fabian Dori, the Chief Investment Officer of Sygnum Bank. We're going to be talking about stablecoins. Fabian, lovely to have you here.
Thanks for inviting me. Thank you.
So if we can go into stablecoins a little bit, they've sort of been regaining traction. They're not completely new, but they've come back in popularity right now. How much would you say that asset management is centered around stablecoins or more of this sort of digital, decentralized finance as a priority?
Yes, as you outlined, I think it's true that with the Genius Act becoming US law in July this year, stablecoins have additionally gained in attention. However, they have been playing an important and increasingly relevant role within the crypto asset ecosystem already before. The market capitalization of the leading stablecoins has grown from around 130 billion US dollar by the end of 2023 to around 200 billion by the end of last year, up to around 280 billion of US dollar by now. Now, this is a significant increase, and an increase that has, at least in parts, been driven by the broad set of functionalities that stablecoins provide, especially to crypto asset managers that are involved and engaged with the decentralized finance ecosystem, be that for simple token trading, being it for borrowing and lending activities on decentralized platforms, being it for liquidity provisioning purposes, or derivatives trading, crypto derivatives trading, or simply for 24/7 liquidity and cash management. Now, that use case of stablecoins within asset management is growing. It grows beyond, so to say, the crypto natives players, as with the regulatory frameworks for stablecoins that are introduced around the globe. The ability for traditional finance managers to engage with stablecoins is also advancing. We have seen Europe introducing MiCA at the end of last year. As mentioned, the US has followed suit with the Genius Act this summer, followed by Hong Kong, who also introduced the framework in August. So that regulatory framework is really accelerating institutional adoption, enabling traditional asset managers to integrate with stablecoins much more easily. So a long story short, I think for most crypto native asset managers, stablecoins are already central to their daily operations. And for traditional asset managers, the groundwork is now really being laid for stablecoins to become much more significant in the near future.
I think you touched on it a little bit there, but when stablecoins and I guess some of these digital Bitcoin areas came about at the start, people were slightly more apprehensive. But as that sentiment's changed, how is that changing the future of asset management?
Yeah, that's a great question, because I think it's also a bit of a paradox, right? At the beginning, the ethos and spirit about blockchain technology, DLT technology was all about decentralization, being independent from central institutions, centralized issuers, etc. And stablecoins, at least the centralized stablecoins, propose a counter offering to that. Nevertheless, they are a key ingredient for both the decentralized finance ecosystem to work properly, and they're a key element to really bridge traditional finance with crypto finance, what we call with the future of finance. So I think there clearly has been a shift in the sense of accepting stablecoins as a key ingredient for the crypto asset ecosystem to work properly. Although there are certain proponents for both types of stablecoins. Some prefer the centralized versions, others follow more the initial thought of the decentralization ethos of blockchain, and then favor more the decentralized stablecoins.
I'm glad you said that as well, because obviously some of the apprehension is from, ironically, some of the security and the stability that can come with some of these things. Is stablecoins as a general thing, is it a safe investment? And when we look at decentralized versus centralized, are any of these less safe as an investment?
Yeah, I think one needs to take the nuances, the differences into account. And let me start with your first point on whether stablecoins are a safe investment. Maybe I wouldn't call them directly an investment, because stablecoins are more a means of payment, a means of settlement, a means of enabling a programmable value chain, integrating stablecoins with tokenized assets, etc. But they're not, so to say, proposing a long-term value appreciation in an underlying that benefits from a certain investment case. Second, are they safe or not? There, I think the framework is really advancing in the sense that especially regulated stablecoins nowadays can offer a value proposition that appeals to institutional investors as well, because the frameworks define the requirements that are needed to set the stablecoin up, the license that is required, the allowed collateralization, reporting obligations, independent assurance reports, etc. So I think the framework for regulated stablecoins, which typically then are centralized stablecoins, is ever more in place to really make them, from a traditional finance point of view, a safe tool for payment, settlement, and the like. Yeah. And you ask, so to say, are there nuances, right? What are the risks? And there, I think it's really important to differentiate between centralized and decentralized forms of coins, because there are three main differences between the two forms, relating to first, obviously, the issuer. Second, also the type of collateralization, and third, then the risk exposure. Centralized stablecoins, as the name suggests, are issued and managed by central organizations, be that private companies, being it government bodies, etc. And here the top issuers are Tether with USDT or Circle with USDC, for example. These stablecoins are typically backed one-to-one by reserves in the reference asset they are actually pegged to. So for each US dollar stablecoin issued, there is an equivalent amount of US dollar held in reserve and then typically invested in, for example, short-term US treasury assets, in commercial papers or cash. And that is also then the key advantage of those centralized stablecoins, namely they have an easy to understand collateralization process, and they have the promise of, on average, providing a higher stability given the direct collateralization approach. On the other hand, as we have touched before, right, they also introduced a bit of a certain kind of concentration risk. It's really concentrated in one issuer. It might be concentrated on the custody side, on the management side, etc. So the key risk here is really all about concentration. Decentralized stablecoins work a bit differently. They are issued by more or less decentralized autonomous organizations and operate really on chain. Here, top stablecoins are Ethereum's USDE, for example, or DAI and Sky US dollar from the MakerDAO and Sky ecosystem. And the interesting part of decentralized stablecoins is that they maintain the peg to the reference asset, not necessarily with a collateral in that asset itself. They can also invest into typically then an over-collateralized reserve basket, or they maintain or propose to maintain the peg through trading and algorithmic minting and burning algorithms. With that, they introduce less, so to say, of a concentration risk. But here the risk is more around the value of the underlying collateral basket. In case it is hedged, as with Ethereum, there might be an imperfect hedge. There are also regulatory questions, right? How to treat such a token? Is it a security or not? So there, then the risks are more with respect to the value of the collateral basket, potential hedging questions, and obviously regulatory topics that need to be addressed.
Amazing. And I guess just as one final wrap up there, do you think stablecoins are here to stay? So is there enough appetite to keep this long term?
Yes, I'm really convinced so. Yes, both in the short and in the medium and long term. Short term, it's really all about integrating with the decentralized finance ecosystem. Then also now integrating ever more with e-commerce, payment applications, cross-border payments, etc. So it grows beyond the DeFi ecosystem. And long term, I still believe in the vision that all assets will be tokenized and that the programmable value chain will need stablecoins, tokenized money market funds, and elements as such to really allow the full value of the blockchain technology, automated processes, etc., to be exploited. So yes, both mid and long term, I'm a strong believer in stablecoins. Yes.
Well, that's a perfect place to stop there. Thanks so much for joining us. It's been a pleasure talking to you.
Likewise, thank you.